Dear students, this is the continuation of the video aired on 21st day of this month. There are two corrections of the question that aired on 21st. That is, the total amount of subscription in the receipts and payments account is 5,900, and the total of receipt side of receipts and payments account and payment side of receipts and payments account is 45,800 each. And there is one more thing, that is canteen expenses prepaid, and next is building amount is 15,000 and fixed deposit is 10,000 each. Sorry for the mistake. So now we shall go directly into the problem. For that we have to find out the following things. From the very outset of the questions given, one thing is very clear, that is, we are not given with the opening capital. Therefore, the first working note should be for finding out the opening capital balance of that particular non-trading concern. So we have to find out the opening capital balance. For that we have to prepare a statement of affairs. That statement of affairs should be dated on 1/1/2013. That should be its date. Now we are going to work out what is the opening capital balance by preparing a statement called statement of affairs. That is on the opening date. So this is the opening balance sheet, that is statement of affairs on 1st January 2013. Liability side amount rupees, asset side amount rupees. In order to write items in opening balance sheet, that is statement of affairs, we have to rely on the information given, that is the adjustments given. First adjustment is subscription receivable, that is on 2012, and subscription receivable on 2013. So subscription receivable is 1,000, that is on 31st December, that is on 2012. Subscription received in advance, that is 200. Salary outstanding, that is 1,000. Canteen expenses prepaid, that is 500. That was one of the corrections. And furniture at book value, that is 14,000. And building, that is 15,000. Fixed deposit, that is 10,000. From these figures, we may prepare the statement of affairs. The first item is on the asset side. We shall look into the asset side first. The first item to be shown on the asset side is cash balance and the bank balance. That opening cash balance and opening bank balance is given as the first item on the receipt side of receipts and payments account. That is cash that is 2,000. Next is cash at bank, that is 6,000. then we look into the adjustments given. First one is subscription receivable. We are given subscription receivable as on opening date as well as subscription receivable on the closing date. In order to write statement of affairs or opening balance sheet as on 1st January 2013, we rely on the first amount column of the adjustments, that is subscription receivable, that is subscription accrued but not received. Next is canteen expenses prepaid. So cash in hand and the cash at bank as on the closing date, that is given on the receipt side of receipts and payments account. Then subscription accrued but not received, that is 1000, that is on the adjustment. Then canteen expenses prepaid, that is 1000, that is also from adjustments. These are the items to be shown on the asset side of the balance sheet. First is cash. It is a opening cash balance that is taken from, this amount is taken from the receipt side of receipts and payments account, cash at bank, receipt side of receipts and payments account, and then subscription accrued but not received. There is an opening date accrued figure. That amount is also written on the asset side of the balance sheet. Then canteen expenses prepaid, that is 1000. Then furniture, that is 14,000. Then fixed deposit, that is 10,000. Then building, that is 15,000. And next is the amounts to be shown on the liability side of the balance sheet. Subscription received in advance. Next item is salary outstanding on the opening date. That means salary due but not paid. So these are the items: cash, cash at bank, opening cash balance and opening bank balance, subscription accrued but not received on the opening date, canteen expenses prepaid on the opening date, furniture, that is on the opening date, fixed deposit, that is opening date balance, building, opening date balance, then subscription received in advance, that is on the liability side, that is also opening date balance, then salary outstanding, that is also opening date balance. Then we total it. So we total here asset side is higher than the liability side. So we first total asset side, the balance will be, and the total figure and the total amount will be shown on the liability side of the balance sheet, and we will balance it. The balancing figure is 53,800. This 53,800 is the capital fund, that is capital on the opening date. This capital fund, that is the capital amount of rupees 53,800, that is the opening capital balance, will be shown on the liability side of the balance sheet on the closing date, to which we adjust plus or the deficit, and we total the balance sheet. We're going to look into adjustments one by one. So we are going to work out the subscription figure. In the question also we may look into it. In the question, subscription is given in 3 figures, that is of the previous year, of the current year, and of the next year. So here we can exclude subscription of the previous year and the subscription of the next year or coming year. So in income and expenditure account, we need to adjust subscription only with regard to the current year or subscription of 2013. So here subscription of current year, that is 2013, is rupees 5,500. That is the subscription received during 2013. Subscription received during 2013 is 5,500 rupees. And to that we may make adjustments. And the first adjustment is subscription receivable on the opening date and subscription receivable on closing date. So since 2013, since the subscription amount of current year is given, we need not adjust subscription receivable on the opening date, but we may adjust subscription of the current year, that is of the closing date. So the current year's subscription receivable, that is subscription accrued but not received during the year, that is subscription receivable or accrued on closing date, is rupees 600. That amount need to be added or deducted to the subscription amount of 2013. But when we are given the total amount of subscription, the sum total figure of subscription of the previous, by clubbing the figures of previous year, of current year, or of the next year, we may take into account subscription receivable of the opening date and subscription receivable on the closing date. But in this problem, we are given with subscription, we are provided the subscription of the current year. We need to adjust the subscription receivable or accrued but not received during the current year, that is subscription accrued balance of closing date. So that amount is 600. To this figure, that is subscription received during the year, that is 2013, is taken from the receipt side of receipts and payments account, that is 5,500, and we added subscription accrued but not received on the closing date, that is 600, the amount being 6,100. And to this figure we add subscription received in advance on opening date. So subscription received during 2013 is taken from receipts and payments account, and subscription accrued but not received on closing date, that is closing date accrual figure of subscription, may be taken from adjustments, and subscription received in advance on opening date, that received in advance belongs to current year, that is also taken from adjustments. So in this case, in this problem, we do not concerned about subscription of the previous year, that is 2013, and the subscription of the coming years, that is 2014. We are concerned only with the subscription of 2013, that figure is available in receipts and payments account. To that figure we add the accrued figure on the closing date, and we add a subscription received on the opening date, that is on the opening date. Then we get the total amount of subscription to be credited to income and expenditure account. Here we are not added or deducted subscription of the previous year or coming years, because the subscription amount is given in 3 different figures, that is of the previous year, of the current year, and of the coming year, and we take only the subscription of the current year. To that we may make adjustments. This is the first adjustment. So this figure credited to income and expenditure account, that is income side of income and expenditure account. This 600, the amount of 600 may be shown on the closing balance sheet also. This is the accrued subscription. Accrued subscription is an income to us, and the same may be shown on the balance sheet asset side to be prepared on closing date. This is the adjustment of subscription. First adjustment is over. Salary outstanding on opening date. That figure is 1000. 10,000 is the resultant figure. And next item relating to salary outstanding is given on the closing date, that is 1000. That figure 2000, that figure 2000 is the salary accrued but not paid, due but not paid. Salary of the current year, due but not paid. Therefore, that expense, that payment, that accrued figure belongs to current year. Therefore, salary accrued but not paid on the closing date, that is salary outstanding on the closing date, may be paid during the may be added to the salary paid during the year. Amount of salary to be debited to income and expenditure account is 12,000. The total salary, the total amount of salary paid during the year is taken from payment side of receipts and payments account. To that figure we add the opening date outstanding figure of salary, that is 1000. That salary amount is that salary amount does not belong to current year. Therefore, that amount is deducted from the total amount of salary paid during the year, and to that figure we add salary outstanding on closing date. When we add that salary outstanding on closing date, the resultant figure will be salary amount to be shown on income and expenditure account. In balance sheet, when we prepare in balance sheet, this 2000 amount, that is closing date, that closing date balance of salary outstanding may be shown on the closing balance sheet. This figure we have taken it on preparing statement of affairs on opening date, and the closing date balance of salary outstanding may be shown on the balance sheet to be prepared as the last statement of this problem. So this is the salary outstanding adjustment. So the total amount of salary paid is taken from receipts and payments account, that is from the payment side of receipts and payments account, to opening date outstanding figure of salary may be deducted, assuming that the whole amount has been paid, and the closing date outstanding figure is added, accrued but not paid, that is the total amount of expenditure of salary of the current year is 12,000. That figure may be shown on the income and expenditures on the expenditure side of income and expenditure account, and the closing date salary outstanding figure may be shown on the assets, may be shown on the liability side of the closing date balance sheet. Canteen expenses prepaid, that is given in the adjustment, is opening date prepaid is 1000 and the closing date prepaid is 1500. So opening date prepaid, that opening date prepaid means paid during the previous year, for the current year, and in the previous year amount so repaid might have deducted from the total amount of canteen expenses. That prepaid figure belongs to current year. Therefore, that amount that repaid during the previous year may be added to this year's salary, canteen expenses. And we are also given with canteen expenses prepaid on the closing date. That is, closing date prepaid balance of canteen expenses means canteen expenses paid during the year, but that does not belong to that 1500 does not belong to current year. That belongs to the coming year, that is the next year. So that amount, that is that 1500 may be deducted from the total amount of canteen expenses paid during the year. This 11,500 is the actual expenditure of canteen. That figure may be shown on the expenditure side of income and expenditure account. So actual payment of canteen expenses may be taken from payment side of receipts and payments account, that is 12,000. To this we make adjustments with regard to opening balance of canteen expenses prepaid. Opening balance of canteen expenses prepaid means canteen expenses paid during the previous year, but this much amount belongs to current year. Therefore, that amount has been added to the total amount of canteen expenses paid during the year, and from that resultant figure we deducted canteen expenses prepaid on closing date. That means canteen expenses paid on closing date that belongs to the next financial year. That 1500 has been deducted. This 11,500 is the total amount of canteen expenses to be shown on the expenditure side of income and expenditure account. The closing balance sheet, the closing balance of canteen expenses repaid may be shown on the balance sheet asset side. And the next adjustment is with regard to furniture. 3 adjustments with regard to furniture. 2 adjustments, sorry. First amount of furniture is sale of old furniture given in a receipt side of receipts and payments account. And the next item of furniture is book value of furniture. That is, sale of old furniture during the year is 2000. Book value of furniture on the opening date is 14,000. And the next is depreciation with regard to furniture. 10% is the depreciation. So these 3 figures are there. We have to make adjustments by taking into account these 3 figures. So 4 figures are related to furniture. That is, sale of old furniture 2000, book value of furniture of opening date, that is 14,000, depreciation, that is 10%, book value of furniture sold 3,500. The sale of old furniture, amount realized from the sale of old furniture is 2000. The furniture, book value of furniture sold is 3,500, and the book value of furniture on the opening date is 14,000. That book value of furniture sold is rupees 3,500. That is, balancing figure is 10,500. That is, book value of this 10,500 is book value of furniture on the closing date. There is a opening from the book value, opening book value of furniture is 14,000. During the year, we sold furniture having a book value of rupees 3,500, sorry. And the balancing figure, that is from the book value of opening balance of furniture, that is 14,000. We deducted the book value of furniture sold, that is 3,500, and the balancing figure is 10,500. That 10,500 is book value of furniture on the closing date. Charge depreciation on furniture at 10% per annum on the closing balance. So here we are instructed to charge. We are instructed to charge depreciation at 10% on closing balance. This is the closing date balance. Therefore, we deduct furniture, that is depreciation at 10%. That is 10,500 into 10 by 100, that is 1,050. 9,450 is the amount of furniture to be shown on the balance sheet. This figure is closing balance of furniture before depreciation, that is and this is the closing balance of furniture after depreciation. So from the opening balance of furniture, we deducted the book value of furniture, that is 3,500. That is furniture sold during the year, and we are instructed to charge depreciation at 10% on closing date. That is 10% of 10,500. 10% of 10,500 is 1,050. When we deduct the depreciation amount, that is 1,050, from the book value of furniture on closing date, that is 10,500, we get 9,450. This 9,450 is termed as closing balance of furniture after depreciation, and this figure may be shown on the balance sheet. And this 1,050, that is depreciation of furniture sold, depreciation of furniture may be shown on the expenditure side of income and expenditure account as depreciation. So 1,050 may be shown on the expenditure side of income and expenditure account as depreciation on furniture, and in the balance sheet and in the closing date balance sheet, 9,450 may be shown as the amount of furniture as on the date, that is as on the closing date. The loss of sale of furniture is the difference between the book value of furniture sold and the amount realized from the sale of such furniture. Here we are given with the book value of furniture sold during the year. That is book value of furniture sold. That is the 8th item, that is 3,500 is the book value of furniture sold. What is the amount realized from such sale? That amount may be taken from the payments from the receipt side of income and receipts and payments account, that is sale of old furniture. That amounts to less sale of old furniture. That amount is 2,000. So book value of furniture sold, that is 3,500. that is furniture having a value of 3,500 has been sold for rupees 2,000. That is, book value is higher than the sale value, or sale value is less than book value. Therefore, there is a loss on sale of the furniture. That loss may be shown on the income and expenditure side, that is shown on the expenditure side of income and expenditure account. That is 1,500, that is loss on sale of furniture. That is, book value of the furniture sold is 3,500, and the sale of old furniture, that is amount realized from the sale of old furniture, is 2,000. Here the book value of furniture is higher than the amount realized from the sale of the furniture. Then the difference between book value of furniture and the sale proceeds from the old furniture is termed as loss on sale of furniture. That loss on sale of furniture may be shown on the income and expenditure account. So two items, that is loss on, that is depreciation as well as loss on sale of furniture, may be shown on the expenditure side of income and expenditure account, and the closing balance after providing depreciation, or may be shown on closing balance of furniture after providing depreciation, that is 9,450, may be shown on the asset side of the balance sheet. Here the opening balance of building, that is given in the adjustments. Adjustment 6 is 15,000, and from the receipts and payments account we can find out the construction of building, that is on the payment side, and construction. So to the opening balance of furniture we add the expenditure relating to the construction of building, that is 15,000. That 15,000 should be added to opening balance of building. Then the resultant figure will be the closing balance of furniture during the year. These are the adjustments of this problem, and now we are going to write income and expenditure account. 1,000. First item is salary, that is 11,000, and the first adjustment with regard to salary is salary outstanding on opening date is 1,000. The opening date outstanding figure, as nothing is mentioned with regard to that, we assume the total amount has been paid during the current year, but that does not belong to current year, that belongs to previous year. So that much amount paid during the year of the previous year may be deducted, and closing date outstanding, that is 12,000, is the actual expenditure of salary during the current year. So these canteen expenses, from the working note we can find out 11,500. And the next is miscellaneous expenditure. There is no adjustment with regard to miscellaneous expenditure. That miscellaneous expenditure amount is 2,500. Next is loss on sale of furniture, that is 1,500. Then depreciation on furniture, that is 10% is the rate of depreciation. That next is by subscription. By subscription, the total amount of subscription received during the year, that figure is taken from our working note. And next is interest, that is 1,000. Sale of Old newspapers is 400. Proceeds from canteen, that is 12,000. The subscription figure is taken from our working note. Interest is given in the question. Sale of old furniture is also given in the question. Then we balance it. So here, when we total, the expenditure side is higher than the income side. So we total the expenditure side and the total is transferred to income side. Then we balance by the deficit is the balancing figure. Deficit figure is 8,850. This 8,850 may be shown on the liability side of the balance sheet by deducting the same from the opening balance of capital fund. Next that we are going to prepare is balance sheet. That balance sheet is prepared on liquidity basis. That is, the immediately payable liability may be shown as the first item on the liability side of the balance sheet, and immediately realized asset, that is cash, most liquid asset, may be shown as the first item on the asset side of the balance sheet. First item is salary payable, that is salary due but not paid, that is salary outstanding, that is 1,000. Sorry, it is not 1,000, it is 2,000, very sorry. Next is subscription received in advance. This may be taken from second item of the adjustment, that is 400. And next is building fund. It is the last item on the receipt side, that is 5,000. Then we write capital opening balance, that is 53,800 minus, that is less deficit. Deficit is 8,850, 44,050. Next is on the asset side. First item is cash in hand. It is the closing balance of receipts and payments account. Cash is 1,300. Bank. Next is canteen expenses prepaid, 1,500. Next is subscription. Here, subscription received during the year of the previous year is 500. But in the adjustments, as the first item, subscription receivable on the opening date is 1,000. Of the total amount of the receivable, that is 1,000, we received only 500. So balance amount of 500 is the amount still accruing but not paid. That is the total opening capital of subscription. The opening capital of subscription receivable is 1,000. Of that figure, we received during the year of the previous year is 500. So the balancing figure, that is 1,000 minus 500, that is opening balance of subscription accrued minus subscription received during the year of the previous year, that is 500. That the difference 500 rupees is the subscription accrued of the previous year. That amount may be shown, that is subscription accrued. And to that figure we add subscription accrued during the year, opening date, accrued, closing date. And the next is furniture. Furniture, that is from the adjustments. We may write this 9,450 and then is fixed deposit. There is no adjustment with regard to fixed deposit, therefore that amount may be directly written, that is 10,000. Next is building, that is 30,000. Here the building fund is not 5,000, it is 10,000. So salary payable, subscription received in advance, building fund, capital fund, cash in hand, bank, canteen expenses prepaid, subscription accrued on opening date, accrued on closing date, then furniture, fixed deposit and building. 57,350. So this is the total of the balance sheet, 57,500. So this is a little bit complicated figure, complicated problem. If you have any doubts, please email to me at ukk.moothedath moothedath@gmail.com. Don't hesitate to email if you have any doubts with regard to the calculation, working note, income and expenditure, or any other explanation, and the balance sheet as well. Thank you very much.